presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Moe.
Hello everyone, and welcome to the Compak Asset Management Market Wrap YouTube update for June 25th, 2021. I'm Moe Ansari, host of Market Wrap and president of Compak Asset Management. And don't forget, on those weekly updates, you can always subscribe. Just click on the buttons on the side and first to like, and whenever I do an update, you will get notification to make sure you click on the subscribe button. Looking at the reopening plan, looking at COVID, the country is just about all open all around. There's a couple of states that are going to wait until July or so, but by next week, we should have everybody all open all across the United States. That is great news, but we do have the Delta variant that is starting to show up here. It's much more a problem that we could see spreading much more. It's a lot more contagious, and that's really the problem that people are looking at. So we will see how this plays out. But interestingly enough, they did a survey. Where did this virus come from? 58% of the Americans believe it originated in a lab in China. 77% of those are Republicans, 65% of the independents believe that it came from China, and 43%. And I've said this a year ago. I believe, that was my opinion. I don't have any concrete evidence, but this came out of a lab in China. We are starting to see the COVID, this variant right here, the Delta variant or the Indian variant, whatever you want to call it. The numbers are coming down in India, but in the rest of the world, these numbers are going up in the UK and the United States. That's the Delta variant, which is the Indian variant. Even though it is very, very contagious, but it is still, the efficacy of Moderna and Pfizer seems to be pretty good against it. So we will see as everybody opens up, there's no masking anymore. All the indoor dining is there. Even though some people are recommending, the World Health Organization is recommending that people, when they dine indoors or are indoors, they should have their masks on, but that is up to an individual to have those or not. We're looking at the recovery tracker. Weekly retail sales, our new level. This was the level in 2019, so we're getting very close or even higher than that. We're looking at all the numbers looking pretty good. This is the rail traffic. It's higher than where it was in 2019. You're looking at steel production. We're very close to where we are. Hotel occupancy has come back up. As a matter of fact, if you're trying to go on vacation, there are no hotels available. If you're trying to book an airline ticket, there's very few available. It's becoming the global commercial flights are still way down. They're down by 29%. Globally, that's where we're seeing still, because as I mentioned, I think the recovery is going to ricochet around the world as we see the vaccine distributed. U.S. is the first, China was the first, U.S. is second, and now we're seeing all of this being, Europe is going to be third, and then the emerging markets. This is one of the things that we saw over the last couple of weeks, is the Fed coming out and saying that they're going to taper, probably raise interest rates twice in 2023. That timeline was moved up from 2024 from the end of 2023. So now this is the timeline that we're looking at. The first hints of tapering will be in August or September. Usually they make announcements at the Jackson Hole meeting. That is a meeting that takes place in August, where we get all the presidents of central banks from around the world. They come in. It's a casual sort of a format, but major policy changes are announced there. That's where we expect to see some kind of hints that we are going to start tapering. A formal announcement in December that they're going to start. What is tapering? It's the $120 billion of bonds that are bought every month. That is how much is being put into the economy right now. $40 billion of this is going to the mortgage-backed securities, MBSs, which goes to the real estate market. I think we can cut this out very quickly because housing market, I don't believe, really needs the support at this time. It's absolutely on fire. If you cool it down a little, it's okay, and that'll leave $80 billion of other treasuries that the Fed can continue to buy. But we expect a formal announcement by the end of this year. That is in the last quarter, somewhere around Q4. They'll start tapering at the pace of $15 billion per meeting. That's every meeting they'll cut back from the 120, 15 billion less, and so on. That is the amount of money they're putting in. They're not raising interest rates. Then somewhere in the end of 2024, they might 2022 look at how the tapering is going, what the economy is doing, what the stock market is doing, what the real estate, and then decide, okay, should we start raising interest rates? If the economy is still roaring ahead, which I don't think it will be by the end of next year, I think we could see rates going up at that time. They could go up twice from 0 to about 0.5%. It's not the end of the world. And that's somewhere in 2023, a year and a half from now. Everybody had a tantrum. Oh my God, market went down the last week. Now this week, we had a great week, one of the best weeks, and we snapped right back up because reality came in and said, if interest rates do go up end of next year, what is that going to do? We've got 18 more months of money coming into the economy, of low interest rates. This is the dot plot in March. They did not have any interest rate increases. They put in 2 increases into the June meeting. But the PCE, that's what came out today. The Fed is not really expecting it to change a lot in March and in June. You can see there's very slight increases that the Fed expects in the PCE. So they did not change the inflation outlook, but they decided to increase interest, or decided they might increase interest rates somewhere in 2023. There's a lot of time between now and then. We have to see how the economy performs. The market still likes what we are seeing, still a tremendous amount of money coming in. You've heard me say on the radio broadcast that I believe that once we get past the bulge, the initial reopening bulge, as I call it, of demand and freedoms, we'll settle down into a normal sort of routine. Once we do, in September, kids go back to school, I think the economy is also going to slow down. Looking at the charts, 42.35, we closed at a new all-time high today. Never ever been higher in history as far as the S&P is concerned, at 4280.7. You can see that we came down last week a couple of times to the 50-day, the blue line, and we snapped right back up from there. Target now becomes somewhere around 4,400 plus or minus is what I'm looking at. Support still at 41.92. That's the 50-day moving average. We still have some more support here at 40.23, and then the 200-day moving average at around 38.13. So those are numbers I'm looking at right now. On the weekly chart, extension of the fourth wave. You can see wave 1, we started here, wave 2 down, came back, and now we're in wave 3, which is the longest and sharpest wave that we've seen. Started last July, and we're still in it. Nice move up this week. Probably 44.75 becomes a target on the weekly charts. Are we going to see a correction first, or do we hit new highs first? No one knows. We get a 10% correction every year. Some reason we could get one. But overall, I think the market trend is higher. You have to remember, the trend is your friend. Don't argue with it. Make sure you're fully invested. Make sure you have a diversified portfolio, and enjoy the ride. Don't overthink it. I've said that so many times. People get, oh, look at this, look at that, I'm going to do this. Don't start to try and overdo it. Have a nice balanced portfolio and enjoy the growth in your portfolio. Nasdaq, new all-time high, 42.11 was what we were looking for right here. We broke above that this past week. New all-time highs closing today, 14,360. Next target, 14,750. I've talked about that. Support is around 13.8 right now. Looking at the weekly charts, nice week to the upside. Long-term target is 16,400 now, 2,000 points higher than where we are right now. We can get another 2,000 points. Will we go straight up? That's what it's starting to look like. And if interest rates sort of stabilize, I think growth could come back in fashion. And some of these stocks that have been going sideways, and looking at especially looking at what has happened to the Russell. This is the gold chart again, broke sharply when Powell said they could raise interest rates, right through the 200-day, right through the 50-day, all the way down to about 1760. Now we snap back up a little bit, but we're still here. We need to get above the 1832 and 1837. This is the 200-day moving average. This is the 50-day moving average. So we need to break out above it before we go there. Here's the emerging markets. We're looking at 54.38 as support. We're looking at 53.71. resistance. I don't know if that's a 50. I think it should be 56.71, not 53. Also, we're looking at 51.67. Emerging markets sort of going sideways, not really very exciting. I think it's going to be another few months before we can get the vaccines out to the emerging markets. First, Europe has to reopen, just like the US, then we get to the emerging markets. So about 3 months away. Looking at the small cap, still stuck in this range of 2360 to 2100, just going back and forth and back and forth and back and forth. We're really not going anywhere. This is since February of this year. If you look at the Amazon chart, it goes all the way to September of last year. Same sort of thing, where it's stuck in a range, not going anywhere. We've got to break out about 2360. If we do, 2500 sort of becomes the upside target. We're 2334. I don't know if we'll be able to break it. Last time we got here, we came back down. Now we're back up again. Hopefully we can break out above this resistance and start a new path to the upside. This is the reopening trade. This is the small caps. And if small caps, when a reopening trade takes favor, that's when the small caps do well. Here's the weekly chart. Again, big sideways pattern. If you do break out 2425 to 2500, 2250 and 2100 are support. Those are my views. That's the way I'm looking at the markets this week. Again, don't forget to download the app, the Market Wrap with Mo. All you have to do is click on that on the link below, and that will take you to the App Store, and you can download the app where you can get the daily broadcast on Market Wrap that I do every day. Some great guests. I had Alan Blinder on yesterday, I believe, the former Vice Chairman of the Federal Reserve, and some great people every day, and you can get my views every day on Market Wrap, the daily broadcast that I do. That's my views, and if you'd like to come to a seminar, I'm going to do a live seminar in San Jose on the 9th. Just go to compak.com and you can register there, or if you'd like to meet with me on the 8th or the 9th in San Jose, I'm going to be there. Yes, I'm starting to travel. Looking forward to seeing a lot of you in person, 8th and 9th in San Jose, and the 9th is the seminar. Just go to compak.com to register. Have a wonderful week. You've been listening to Market Wrap. I'm Moe Ansari. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.